I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So Europe was off a bit, but Japan continued to add to its gains. Our markets did have a decent day yesterday, but we couldn't quite reclaim the 50-day, something I'm wondering if we'll be able to do today.
I think it's going to try again. As long as we base in like an intermediate spot, maybe we gain enough power. You know, this market lately has been a little tricky. We've had like 5 gap ups in a row, and every single time you get a little follow through intraday and then we fade off, so things aren't really closing at their highs or at their lows. So the intraday action has been tricky, but overall I do think, you know, the market's been pretty healthy. Like you mentioned, Japan, what did it have, a 20% move off the highs?
Exactly. And so being as Japan is continuing to add to its gains, it's sort of adding fuel to that thesis that it was viable when it was 20% off its highs.
Yes, and now people are coming back and saying they're more comfortable with Japan, but nobody comes out when it matters. You know, the stock or that country had or the Nikkei had a huge move up, 50% plus, and then the 20% pullback made sense. You look at the chart here of the EWJ, you know, we talked about in this area, which wasn't perfect because you don't have to be perfect, that it should be buyable. And right here was that day we had a nice little up move for a trade, but then I said for some who have longer term time horizons, this is, you know, this is a good spot to put on some risk. And from there, look where you are now. So if you did so, this is probably a spot you're going to take a little bit off. We also talked about Toyota. Remember that? It also had that outside day right around here was when, you know, this is a spot for exposure, 112. Look where it is right now as it looks like it's continuing up. We talked about the DXJ. These are all, you know, things that, you know, you need to introduce yourself to in order to stay with certain trades. And for this one, it doesn't seem to be coming up. I'll give it one more try here. Oh, there you go. Anyway, you know, with that being said, during corrective phases, you know, you just have to be open and aware to what's really, you know, transpiring. Like there, at 20% off the highs, everyone's like, oh my goodness, Japan's cooked. But meanwhile, in relative terms, it was up 50%, so the volatility was just that much, you know, higher there.
Right. Well, if we turn now back to our markets, if you believe that we'll attempt to reclaim the 50-day again today, why don't you show us a visual of the levels that we should watch?
Well, with that said, you know, last week we came in, we were looking for that pivot low in the SPX. It was, I think, 1560. From there, we talked about a snapback to retest broken trend lines to protect, you know, to look at the 50-day again, which is what we touched yesterday. But maybe first few times, you know, it takes a little bit of, you know, knocking on that door. You look here at the chart and you will see that, you know, here we are. This is a tricky spot, right? This was your pivot low. This is when we reclaimed the 100-day. So this was your compelling spot to be long. And for those who take an active approach, you know, you're probably trimming to here. So now what you want to do is you want to see how do we hang out here? How do we hold? We have some new flows that come in the beginning of the third quarter, which could have been the start of yesterday. We're up a little bit today. I would say as long as we stay above 1601 and do some sideways action and so show commitment to this move off the lows, I think next time we try could have more power. If we start breaking below, you know, yesterday's low and then this area and close below it, people will be saying, you know, it's time to retest the 100-day, maybe even, you know, the summer low or below. So I think this little area this week is going to be very, very interesting. But there's been some really nice action out there, and there's been a lot of different two-way type trades.
Exactly. Yes, we can look at this market glass half empty, or we can look at this market glass half full. And we'll end on a high note, so we'll start with glass half empty. And the banks are flashing us some mixed signals right now. They are looking weaker. Goldman Sachs looking the weakest among them. So do you think this is a possible short?
I think people were trying it yesterday, and I think we put it off the chart saying it hasn't really bounced back. So I think the next day or so for Goldman is going to be important. You know, does it hold support or does it break down and bring the financials lower? You look here at Goldman, there's been a lot of different ways to maneuver it. This was a really nice trade for us from the long side right around here when it broke out above 152. This is when this support or this ascending trend line broke to the downside. And look where we are. Okay, the market is most sectors are all the way up here. retesting this area, and Goldman Sachs is all the way down here, below some of the key moving averages. So I would say watch yesterday's low, 151.70. It might even be below that. I would say a close below 151 with some kind of authority, and then you're going to see some pressure on the banks and perhaps the rest of the market. So watch Goldman Sachs today for clues and figure out if there is really weakness there.
And how about Morgan Stanley, weaker as well? Where might this be worth a look short?
This one too. This one had a nice size move, and since we've rallied back, not much of a rally. So you look here at Morgan Stanley, which I wouldn't say it's like a barometer like Goldman, but you want to take a look at some things. This is when you had this outside day right there, which led to the weakness. Here's where we held. Now it's got this small little pennant type pattern right on support. So if this were to start breaking below the low of 24.26, you could see some weakness, and then there is your 100-day moving average. So with that said, sometimes these two stocks are very tricky, where they'll look weak, and then they'll just engulf you and go. So, I would wait the first 30 to 60 minutes to really see if they're selling there or if it's just out of play.
Well, banks like these aren't alone. We saw some relative weakness out of some home builders yesterday as well. Stocks like Lennar, which slipped about 1.5% and has lost the support of all key moving averages.
Yeah, so I don't care what you're saying. I think the housing recovery still has legs, but stock action is stock action. And this stock started to get weaker earlier, which gave some clues that we're going to pull back before the May 22nd, outside day. But then since then, now it's below the 200-day. You look at this chart here. You'll see here's your defined, triple top resistance. This was one level to, break or have a high level stop at 42. And since then, it broke below the 200-day, came back, retested it, and is still getting very comfortable below it. So with that said, you got to be careful here, okay? So at this particular point, this is giving you some signs that there's not really that much of an appetite.
And Toll Brothers as well closed on lows yesterday. So will this be on your radar for a possible downside continuation today?
Yeah, I'm probably not going to be the guy that goes out and shorts it because I'm more of the glass half full type of guy. But this will give me some clues to be more careful with some of the better acting stocks. Whenever you see some home builders and financials that help lead the move, not act so great or bounce back with any kind of force, you got to be a little skeptical that this market might need more time and just be that much that much more careful buying highs and looking for momentum. You look here at this stock and you will see that just like Lennar, here was your double top here and your outside day. This one, it broke lower. It bounced off this key support, but wasn't much of a bounce. So at this point, I would watch it. Yesterday it did close red while the market wasn't. And if it starts breaking below 32, this is key support. Key support here comes in around 30, 36, and then at least you have your defined resistance. But overall, this outside day helped give clues for weakness to come, and it did. And now it's really not bouncing back with any kind of strength.
All right, coming up, we're going to go glass half full and go in the trenches with stocks that keep on moving to the upside. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that keep on moving to the upside. Stocks like Tesla, which we focused a lot on over the past month or so. It held all key moving averages during the correction and managed to reach new highs yesterday.
Yep, and it shows you that when you look at corrective activity to see where there's information that could help you, this was one of the stocks that held up best. They had the recall that everyone obsessed about. There's so many different things that all the bears tried to point to, but meanwhile the actual price action pointed to better action. And if you look here at the chart, you will see, boom, new highs, new historic highs. It's been an unbelievable mover ever since last quarter's earnings. You had this, big move up, triggered above that high, and since then it's been following the 21-day with a little bit of almost a break there, but it held in there nicely. And then yesterday, you could have been a buyer from our price point sheet of 110.25. It happened pretty quick. Added above the prior high of 1490, and then it closed in the highs. It's opening up a little bit today. I never like to chase a stock at new highs, but if you're still long it for a macro move, I still think it goes higher. If you were in it tactically from yesterday, you trim some and try and hold some, but ultimately, this stock looks very good.
How about Amazon? Still holding in great. You've called this one a little bit of a trickier stock before, but would you say, looking at the chart, that it's only a matter of time before we see it break out?
It seems like it. The reason why I say it's tricky is because sometimes it tests areas, it breaks through, comes back below, and if you're pretty short term, you like to see a stock like break through, rest, continue, blah, blah, blah. This one, is right at that level. So if you look here at Amazon, you'll see that, a few weeks ago we had this spot right here, this 272 that gave us a nice 2-day trade back to these highs. Then we got into that corrective activity over the course of the past month. Only came down, tested the moving averages, held higher. It's almost a series of higher lows, low, higher low, higher low, higher low all the way up. Then yesterday, didn't quite have enough power to power through, but if the market hangs in there today, or maybe Friday, it could get that move through the 283 to 285 to give you that breakout trade. And traders love breakout trades because they pay you pretty quickly, and traders, we like immediate gratification.
Yeah, who doesn't? But how about Visa? What do you think about this one? It actually put in a new high yesterday.
This one, I think, if you're a Visa fan, just be long it, let it go. It's every few weeks, months, it makes new highs. I know when I try and trade it, if I buy high, rarely I sell it higher. It's very tricky, but ultimately, you look at this chart, it's strong, it's in a nice trend, it continues. It tried breaking out yesterday, didn't have enough power to do so. Maybe, it tries again today, but ultimately, this also had a really nice base over the course of the past 3 months, a high-level base protecting this last breakout, which was very strong around 170. So ultimately, if you're an investor in Visa, I think you just stay the course.
And in the hot 3D printing sector, X1 is a hot new issue. It held in great during the correction and now is at new IPO highs.
And not only it's been new IPO highs for the last 5 days, showing that there are things that could break out even if the market isn't showing much momentum, and especially new names like IPOs. And we've talked about this one so many times. We've talked about the 3D printing space, and Steve LeVay, who likes to trade these type of names, he's been all over it. So you should definitely tune into him and Mike Lee. They're very good at what they do. And look at this stock. This stock showed you what it wanted to do. Well, it's been following the 8 and 21 all the way up, not even getting to the 50, and then it broke out. Look at the day that it broke out. This broke out on 625. I think this broke out the day the market hit its bottom. Okay, so it didn't even wait, and then look at the move. So at this point, a little bit of a doji, so that means it could rest a little bit, let the moving averages catch up, and figure out a plan on how to get to know this stock, because this stock, is a mover, and it could make you money if you learn how to approach it with a plan.
All right, let's do some quick hits here and talk Apple after its reversal on Friday. Apple had a nice rare continuation day yesterday, perhaps lifted by the news that it filed for an iWatch trademark in Japan. So you think we'll get some continuation?
Oh, well, day 3, I haven't seen one of those in a while in Apple, but I do think that there's room to the upside. Again, yesterday we talked about how I was headed to the Hamptons on Friday, and my Twitter feed was going off, hey, Red Dog reversal in Apple, right near the old 52-week lows. We have not only a Red Dog reversal, we have maybe a double bottom, and it's also going up on the markets lower. You put all those together, it's worthy of a trade or a look. You look at the chart here, which has been battered and bruised from the highs here last September of 700, and then failing at every spot all the way down. Finally, you have this lower level trade where we were talking about trying to find some type of reversal pattern, and that kind of failed right here when this ascending channel broke to the downside. So if you got out here at 444 or 428, you know what? You saw this Red Dog reversal trigger when it was at 393. What it did is it held the prior low of 385. Closed pretty strong yesterday. It actually gapped above this little descending trend line and held above it. It held the gap for the first time in a long time. Okay, so what you want to do is just monitor little changes. So at this point, can it rest a little bit here? Perhaps. I know it was up pre-market. I'm not sure where it is now. I think ultimately, it gets to this 418 to 419 before it, it pauses and stops. But overall, I think to keep the commitment here, you want to see it hold at least half, build maybe a little flag, and then it can continue. And I don't think that iWatch trademark for Japan or whatever they registered for, some people saying, oh, it's a decoy to show that they have something working. They don't really have it working. I think they have the iWatch in the works.
Well, yeah, it's been reports for quite some time that they've been working on it, so a lot of people took that as proof.
Yes.
Well, we'll see. All right, but over in the metals, gold continues day 3 of its snapback. Do you think that can continue?
I do, but my rule is, day 1 is when you look to, buy it. When you see some kind of sign on Friday, gold, the miners, silver and gold all showed a lot of relative strength, and it was just like enough blood in the street to look at it. Then yesterday you got your follow through in gold that already happened, with silver and the miners on Friday. Now today, up on the 3rd day, I don't think it's a day to get heavy. I think it's a day to trail or trim some. If you look at the chart here, you'll see here was that wide range bar. Here was your red dog reversal on Friday. This is when it went below the prior day low of Thursday of 65. When as low as only 14.68. So not even $1 risk for what has turned into about a $6 move. Yesterday triggered into the gap, pretty much almost filled it. So I do think there's some room to fill this gap up to 123-ish. And then it's going to have to do a little sideways action to prove if it could fill this next gap, which I think will be a little bit more difficult. But ultimately, nice 3-day tactical move. If you've been bugging out about gold, you had every right to, because you've been holding through what the technical damage has added up. If you've been on the sideline waiting for some kind of compelling setup, hopefully you took it Friday and you could actually sell some and take some profits today.
Right. Well, we talked X1. Let's talk fellow 3D printing stock 3D Systems, which started to perk up yesterday. Do you think we'll see it pick up some momentum?
Now, this one is kind of like hit or miss. It's been very strong, but it has a tight pattern, so I am long a little bit of this. If you look here at the chart, let me get my little pen. You do have an inside range right here, so it does look like if it can get above, 45.40, it can continue. Then it has another area of resistance up here at 48. But overall, I think this group is going to be here for a long time. It's innovative, it's young. This stock's been around for a few years already, not like X1, which was a new issue. But ultimately, nice tight pattern. This market wants to continue. This is in the cards to go with even SSYS.
And CF Industries showed relative weakness yesterday. Do you expect downside follow through there today?
The ags have just been very weak. So if we start to break down, this group has been out of play. I don't think I've bought an ag in like 2 months, maybe for like a tiny little trade. And, this group tends to be spotty. And CF used to be a leader of this group. And if you look here at the chart, you will see it is not showing any leadership type qualities. Look where the 200-day moving average is, well above it. It's now on key support as the market just bounced. I don't see any reason to own this right now. If it starts to break below this support level, you might even get downside follow through below 170. And if that's the case, maybe you go to your weekly chart and you'll see, much bigger support, coming in a little bit closer down to 155.
And lastly, let's just check in on Scott's thesis of going long the TBT. The TBTs have been pulling back a bit. If we sold on strength, where should we potentially buy back?
Well, it's had a pretty controlled pullback. If you sold above, what was it, 90, actually let's take a look at the chart, 74, 75, yeah, that's what it was. Here was a breakout. Okay, this is when it closed through that 70 level, gave you a nice move up to 76. We talked about selling some strength here. It wound up, being prudent, and now it's on its way back down. I would say if you did sell some strength and you're looking for a re-entry, I'd love to see it hold the 21-day, which it's held pretty much the entire time here. It did flash through once and came back above it, so I would say this 71-ish should be an opportunity. So, sometimes the computers play around with you, might get it below, but if that's the case, stay with it unless it closes below. That means you might have more downside, but ultimately this area to me is going to be an opportunity, and then this is also where the gap starts, and this is right here at around 71.55. So I would say from 70 and 3/4 to 71.5, that should be a spot to to see if at least it acts okay.
All right. Well, we are inching closer to Friday's jobs report. Should we expect action to remain choppy? What will be your strategy?
Mine is going to see if I could stay with some of these strong stocks, and if the market does start to fail at this intermediate area and they don't continue to hold up, I'm just going to continue to be tactical. The last month has been really nice as far as being able to trade areas of the range. Last week, you had a nice tactical long from when we hit that what was it, 1560 area to bounce back to retest the trend line. Right now it almost feels too easy that we kind of failed there, but maybe it's not. Then before then, at the May 22nd outside day, people were trying to be short all the way down to at least a 50-day and below. So ultimately, traders have finally been able to trade, because we've been in this figure-out consolidation stage. But at some point, you know, it might not be this week, it might not be this summer, maybe closer to the fall, we'll get back into a trend where you see more than just a few stocks show leadership, and then we can get back into portfolio approach. But right now, you know, we have our defined levels. SPX, as long as we stay above 1601, I think the bull is going to try and stay with some positions. We start breaking below 1601 in the SPX. I think that most guys will abandon ship and might even think to start shorting some of the weaker names, or at least, you know, stay in a high level of cash.
All right, and with that said, happy trading, everyone. Have a great Tuesday.